So let's talk about the economy. Because if you're feeling a little confused right now, you are definitely not alone. I mean, one minute the market's soaring, the next it's taking a nosedive. What is going on? Well, today we're going to try and make sense of this tale of two markets. Seriously, are you feeling some financial whiplash lately? Because it seems like for every single piece of good news, you get this contradictory headline popping up right behind it, flashing all these warning signs. It's confusing, right? And it's not just you, it's what's happening in the markets right now. Okay, so that brings us right into our first big topic, what we're calling a market of contradictions. And look, this isn't just random noise. This is a real, fundamental battle between two completely different stories about where the economy is headed. You got the classic fight, right? The bulls, who are all optimism, and the bears, who are pretty sure everything's about to fall. And this really lays out the two sides of the coin. On the one hand, you have the bull case. These are the folks betting on what's called a soft landing. The idea that we can get inflation under control without totally wrecking the economy. They're excited about potential interest rate cuts down the line to fuel even more growth. But then, you've got the bear case. They're seeing nothing but storm clouds. They're worried about a potential bubble in AI, inflation that just won't go away, and maybe the biggest one, signs that we, the consumers, are starting to spend less. So let's dive into that first big fear from the bears, the great AI bet. I mean, this is the question on everyone's mind, isn't it? Is this the next big boom, the technology of the future? Or are we all just watching a massive bubble inflate in real time, just waiting for that inevitable pop? And make no mistake, this is not some niche concern. This is a fear that is actively pulling the levers of the market. I mean, just look at this quote. These worries absolutely hammered big tech stocks, and when they get hammered, they can pull the whole NASDAQ index down with them. And who's right in the eye of this hurricane? Well, it's the chip-making giant NVIDIA. For what felt like forever, it seemed like their stock was a one-way ticket to the moon. But lately, oh boy, the story has gotten a whole lot more complicated. Just wrap your head around this number for a second. $5.83 billion. That's how much NVIDIA stock the tech giant SoftBank sold off. And they didn't just trim their position, they exited their entire stake. When a huge, smart money investor like that cashes out completely, it sends a massive signal of doubt rippling through the entire market. But like we said, this is a tale of two markets. The AI story is nowhere near that simple. Because for every big player like SoftBank that's getting out, you've got another one jumping in with both feet, basically betting their entire future on this tech. And a perfect example of this is Tesla. Yeah, we all know them as an electric car company, but more and more, they're framing themselves as an AI and robotics company. And let me tell you, some investors are buying that vision hook, line, and sinker. In fact, you have analysts at Wedbush saying Tesla could hit a $2 trillion market cap. And why? Precisely because of their AI roadmap for self-driving cars and robots. I mean, what a crazy contrast, right? At the exact same time, some folks are screaming bubble about AI hardware like NVIDIA's chips. Others are predicting an absolute boom from AI applications like Tesla's. So you can see how this deep split in the tech world just creates this cloud of uncertainty. And when investors get nervous, what do? They look for safety. They start running toward what are called safe havens. Those old school assets that are supposed to hold their value when everything else feels like it's on shaky ground. And what's the number one example of that? Gold. I mean, look at this. Prices haven't just gone up. They've surged to record-breaking highs, smashing past $4,000 an ounce. This isn't just a little market move. This is a full-on stampede towards safety. Okay, so what in the world is driving this gold rush? Well, it's pretty much a perfect storm. The biggest piece of the pie, a whopping 40%, is coming from central banks. You've got countries like China buying up gold like there's no tomorrow, trying to diversify away from the US dollar. Then you throw in all the geopolitical risk in the world, lingering worries about inflation, and just general fears of an economic slowdown. And yeah, you've got all the ingredients for a record-breaking rally. And here's the thing. This anxiety isn't just something for Wall Street traders and central bankers to worry about. Oh no. It's trickling down and it's starting to hit how everyday people, you and me, feel about our own money. Just look at this chart. U.S. consumer confidence took a really sharp dive in November. People are just getting more and more worried about jobs, about their income, about their personal finances. And here's why that matters so much. When we get nervous, we stop spending money, and that can act like a giant brake on the entire economy. Okay, so all this confusion and contradiction, it brings us to a really pivotal moment. A week of reckoning, you might say, because this week, a whole flood of new economic data is coming out. And this data could finally give us some answers. It could finally tell us which of these two stories, the bull or the bear, is closer to the truth. So, what's on the watch list? Three huge reports. First up, the jobs report. This tells us how healthy the job market is. Are people getting hired? Then we've got the CPI, the Consumer Price Index. That's the big one for inflation. Are prices still going up too fast? And finally, retail sales. This one's crucial. It'll show us if that drop in confidence we just talked about is actually making people spend less. Now, the market has its predictions, but trust me, any big surprise here could send some serious waves through the economy. And depending on what this data shows, the US economy could be heading down one of two very, very different roads. The stakes here are just massive. Are we on the path to that soft landing everyone's hoping for? Or are we staring down the barrel of a lost decade? So let's talk about the best case scenario first, the soft landing. This is basically the dream scenario for the Federal Reserve. It's where they manage to get inflation back under control, but they do it gently, without causing a huge recession and a ton of people losing their jobs. It's the perfect outcome, and it's what everyone is crossing their fingers for. But there's another possibility being whispered about, a much less rosy one. What if the economy doesn't land softly? What if it doesn't really crash, but it doesn't go anywhere either? What if it just stagnates? You've got some heavy hitters like Goldman Sachs who are actually warning about a potential lost decade for the US stock market. And what that means is a long, drawn-out period of super slow growth and really disappointing returns. Basically a decade where the market just goes sideways for years. And that brings us right back to the million-dollar question. Will this week's data finally clear the air and show us which path we're on? Or is all this crazy volatility we're feeling just the beginning of an even bigger storm? You know, the only thing we know for sure is that everybody is going to be watching.